Good morning, good afternoon, good evening, everybody here. How is everyone? Nice to see so many people in already. Fantastic. Love it when people are on time. Good afternoon, Zach. Afternoon, Saman. Afternoon, Harold. Great to have you all here. We'll give it a few minutes for people to join in and comment. Let me know who's here, where you're from, why you're here. Hi, Bruce. Hey, Jason. Lots of people in today. Absolutely fantastic. Let me whack my phone on silent. We don't want that going off mid trading flow. Hey. Hi, Majid. Good afternoon, Roy. Good day. Hi, Juliet. Awesome. We've got so many people in here today, and it's going to be a really, really cool session. I'm going to cover one of the most important parts of trading that a lot of beginners and a lot of even intermediate traders aren't aware of, and they don't understand how to utilize it. And it's all based on momentum. Okay. It's all based on momentum, catching a trend, being able to maximize your returns. Hi, Steve. Hi, Lisa. So it's going to be a really, really cool session today, guys. So it's always good for me to get an idea as to kind of who's in the chat and what kind of level you guys are before we get started. Let me know whether you're a beginner, whether you're intermediate, even if you just let me know how long you've been trading for. It gives me a good grasp on how I can present all of the information to you. We'll take questions all at the end. But I want you guys to get a notepad, get a pen, take notes if you can. A recording will be made available to you as well. But you know, if you're able to take notes, that would be great. So Raja, intermediate, trading for 2 years. Harold, intermediate, trading for about 4 years. Harold, intermediate beginner. Zach, 4 years. We've got Jamal, Saman, both beginners. Okay, great. We've got a nice mix. Majid over 10 years. Wow. 3 years intermediate. Okay, fantastic. So we've got a really, really good mix, which is great. So if you're a complete beginner, I'll make sure that this session is easily presented to you guys as well. Got another beginner in, fantastic. But what's really important is that you guys, whether you're a beginner or intermediate, that you guys realize that you need to follow the right process in order to get to your end goal, right? The majority of people who want to go into trading, they're very, very broad, and they say, like, look, I want to make more money and I want more time freedom. Time and financial freedom. It's like the perfect concoction, right? Everybody wants that. But a lot of the people that I particularly work with, and what my goals were, and hopefully they kind of resonate with you as well, is it's about becoming funded, getting a nice consistent income coming in. For me, what my goal was when I first started 6 years ago was I wanted consistency. I didn't want to work for somebody else. I wanted to be my own boss. I wanted the flexibility to, see my family and future children, which I now have, right? In the last 18 months of my life has been a bit crazy. I've got an 18-month-old and a 3-month-old at home, which is always fun and games. So 2 under 2, which keeps me busy at home. But that's the reason why I got into trading. So before we start, I'll give you a little bit of background on myself. So My name's Dan. I've been trading for about 6 years. I'm one of the senior coaches here at London Trading Institute. I hold quite a lot of daily live sessions and do a lot of the daily coaching with a lot of our premium one-to-one students within the business. Now, when I first started 6 years ago, I was stuck in the rat race. I was working a lot of hours. I didn't have a lot of money. But knew that I wanted to go into trading as a full-time thing. I was very aligned with my goals of wanting to work with myself. I actually started off as a student with London Trading Institute. So stumbled across Andy and LTI, became a student, learned the process, learned the right materials. Within about 3 months, I was funded as a funded trader with FTMO. I then went on within 6 months to then actively coach other students coming into our business. And then within 12 months, I'd taken both coaching and my trading full time. So it kind of gives you guys an idea as to what is achievable, right? And a lot of the people that we work with, it's not unrealistic if you go through the right process to do all of that within a 6 to 12 month period. It really isn't, as long as you put your mind to it. And the most important thing is that you're consistent and you're disciplined. Okay, that's the main thing. Hey Sanjay, hey John. Okay, so that gives you a little bit of background on myself. Now, the way that I like to trade, I'm very low risk and I'm always very, very transparent. I don't want to be on here and kind of sell you a dream on, you can make tens and tens of thousands right away. But at the same time, I want to show you how possible it is to achieve. For one, it's not an easy journey, but more importantly, I want to show you the process on how you can get there through a system that I use. So I'm going to share with you my screen. And for those that are always on the webinars, I always like to just get a little bit of a sheet up and we do a little bit of drawing, break down a few things for you before we go into some live chart analysis and show you that process, right? Now, a lot of people, and you raise your hands, you can put a yes or a no in the chat. How many people in this chat today are finding the right trades, but not executing them? Either they're getting stopped out and then it turns their way, or they're exiting out of trades way too early and they're not getting the maximum return from their trades. Who in here is experiencing that right now? And look, I only cover topics that I've personally dealt with as well, because I've been through that journey. I mean, I have absolutely done that, right? I've been in a point where I've traded from a point of fear. I've, tried to catch trends and, I've gotten a bit scared, exited out of it early and really, really reduced the amount that I can get out of the trade. Yeah, a lot of people exiting early. No problem, John. I assume that's mainly because you're a beginner. Yeah, so a few people resonate with that. Well, I'm here to show you how you can maximize your profit, but I want to make it really, really clear that there's no such thing as a perfect entry. And there's no such thing as a perfect exit. I'm going to make that very, very clear from the outset. There is no such thing. The markets are independent. We can't control them. If you try and control the markets, you will not win. You will always be on the losing side, right? There's no such thing as a perfect entry. There's no such thing as a perfect exit. What matters most is that you have a system, okay, that allows you to do this or get as close as possible, okay? A lot of people, they go into trading and they want the perfect strategy. They want to find the perfect entry point. They want to find the perfect exit. That's all they want. And lo and behold, within about 3 months, they lose the majority of their capital, or they give up because they lose, or they get into a winning trade. They don't take their profits. They then go ahead and get stopped out. Or alternatively, they catch a fantastic trade, get out way too early, and they think, oh, all of that work that I've put into that trade, I've only taken a very, very small percentage of what could have been. Okay. That's because those people are not trading as a professional and with a system. Your system is hands down the most important thing you need as a trader, and you need to build that system and you need to believe in it. So what does that process look like? Let's just backtrack slightly, right? What does that process look like? That process is absolutely having a strategy. Something that makes you press the buy and sell button, right? Something that you're using different indicators, and it's just making it easy for you to just press buy or press sell. Your strategy, most people think it is the most important thing you need to make money. It isn't. And I want to make that so clear to you guys. Your strategy is like the cherry on the cake. If you're just looking for the perfect strategy and you want to kind of forgo everything else that trading includes, you're only getting about 10% of the overall picture. Okay. And if anything, and I don't want to offend anybody in here, but I'm going to be super, super realistic. If you're just looking for a strategy and you want it to be that easy, it's too good to be true, and you're lazy. Okay. I'm going to show you what you need in order to catch a trend, how to ride it, and how to get maximum profits out of it. And that isn't just about having a strategy. It's about having a full system. Your strategy accounts for about 10%, okay? The remaining 90% is split between two categories, okay? The first one is what we call risk management. Risk management. Can anyone tell me what risk management is? What does it include? I want you guys to be super active in the chat today. Let's get our brains working. The more interactive you are, the more you'll get out of today. Some people can sit there and listen as much as possible, but you need to watch, take notes, interact, and trust me, you'll learn something from today, okay? So what's included in risk management? What do you think? What does that mean? So let's say this accounts for 45%. So Sanjay, I'm going to post these up. So Sanjay, it's about setting a stop loss and a take profit. Yep. Lisa, it's about risk to reward. How much money do I risk per trade? And what is my expected reward per trade? Harold, you've said that. Absolutely. Your risk to reward ratio. For example, as a beginner or as any trader, you don't want to target anything less than a 1-to-1 risk to reward. If you risk $10 as a reward, you'll expect $10. If you risk $100 as a reward minimum, you'll expect $100. Okay? That's what risk to reward is. And you want to target a minimum 1-to-1. Where the really good traders, really start to progress and scale up their accounts is where you start to get 2-to-1 reward to risk. Okay? Where they're risking $100, but whenever they win, they get $200 as a return. Okay. People are saying 1% maximum risk per trade. Yeah, that's absolutely possible. We've got 1 to 2% risk to reward. daily, weekly, monthly max losses, putting those systems in place to say, hey, look, if I lose this amount in a day, I'm going to stop trading. If I lose this certain amount in a week, I'm going to stop trading. Having a stop loss. Exactly. All of these are correct, guys. Okay. Risk management is really broad. What it is all about is helping you understand how to manage your money safely. It's about helping you understand how to be safe with your investments, but also making your numbers add up so you can get a decent return from your trading. So it's risk to reward. It's also win rate, which is a small part of it. Okay. It's also your percentage risk. Okay. It's how many trades. Okay. Sorry, my writing is awful. How many trades, right? There's so many things that go into risk management, and it's really, really important that you guys understand how to keep your money safe. The thing that separates a professional trader from a beginner retail trader is they all understand how to keep their money safe. Okay. I can honestly say over the last 5 years, I've never lost more than 5% of my account, which means I've always had 95% of my pot of money to play with. Okay. I know people out there that are beginners that are on like their fifth account because they've blown it. They've lost 500%. Risk management is really, really important, guys. Okay. So let me take this off here. Risk management, that accounts for 45%. The remaining 45% is what we call your trade plan. Or what I like to call your edge. Okay. Now, what do I mean by that? What do you do different? What do you what do you use what do you utilize that's tailored around your lifestyle, tailored around your goals? For anybody that just copy trades, which I'm sure maybe some of you in this chat have done before and not really had much success with it, right? If you do that and piggyback off of somebody else or copy somebody else's strategy, you don't have an edge. It's not tailored around you. It's not tailored around your lifestyle. Some people work shifts. Some people are fully retired. Some people manage kids or they're full-time mums, full-time dads, whatever. Some people work really long hours. Different strategies work for different people. And I'm here to say there is no perfect entry, there's no perfect exit, and there's no universal system for everyone. But you can utilize tools in the right way to suit your lifestyle. And that's also what I'm going to show you today as well. I've known lots of very, very successful traders. I've even coached some of them, right? They all have two things in common. They all understand how to manage their money safely. They all have their own trading edge, their own system that they implement because they believe in it. They're trading with their personality, with their style. They have confidence, right? The strategy is just like the cherry on the cake. It's not that important. Today, I'm going to show you the system. I want to show you that system. All right. Who's up for it, guys? That all makes sense, yeah? Before we move on? Hopefully it's kind of opened up your mind a little bit. Perfect. 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 Lots of yeses. Great. That means I'm making sense. That means I'm doing a good job. I'll give myself a pat on the back afterwards. And don't be afraid to say no as well, guys, right? Especially if you're a beginner, a lot of this can seem quite daunting, be quite overwhelming. There will be a recording, so don't worry. But as long as it makes sense, that's all that matters. All right. So, what system do I use? I basically cover this in depth every week, okay? And have done for the past couple of months. It is a system I use every single day, and for anybody that wants to watch me trade live and trades with me live, sits with me in the mornings and sees my analysis, they see I'm implementing the same systems every single day, looking at the markets the same every single day. That's what's important. All right. So how do we find the perfect trend? How do we ride it? And how do we get maximum profit? Okay. So rather than me doing some really, really bad handwriting with a mouse, we'll type it out. Okay. So step number one, you need to identify the opportunity. Okay. What do I mean by that? Well, by identifying the opportunity, you're identifying what markets you want to get involved in for the day. A massive part of trading isn't about you analyzing as many different pairs and as many different charts as you can. I did that when I first started, and trust me, it's hard work. It's very, very time consuming, but you don't need to do that. If you identify the right opportunities and focus on those opportunities, you can save time, and you're also identifying the markets that are going to give you the largest return for the work that you put in. The way that we do this is through something called currency strength. Okay. Currency strength allows us to see what currencies are expensive, what currencies are cheap. So when we match them together, we can then say, okay, well, we're expecting one currency to go down and the other one to go up. So if we match them together, we should have a high probability that there will be a big move there. Okay. So this is what the currency strength looks like. You get a pool of different currencies and you can clearly see, if a currency is in like a red zone, we're expecting it to sell off. If we're in a green zone, we're expecting it to buy up, right? So based off of what we see on the chart today, this is the 4-hour time frame, we can expect potentially a drop off in the Aussie dollar, and we can expect potentially some buys in USD. So tell me, guys, if we're expecting the Australian dollar to fall because we're overbought, and we're expecting the US dollar to rise because we're oversold, if we trade AUD USD, what direction should we trade it in based off of this? What do you think? Again, just to summarize, if we're expecting the Australian dollar to fall and we're expecting the US dollar to rise, well, we want to trade AUD USD, but what direction should we trade it in? Let me know in the chat. Just say up or down. Down, sell, short, down. Perfect. 100% correct answers, right? I mean, sure, we're expecting the Australian dollar to fall, the dollar to rise. So when we look at AUD USD, we'll expect it to drop off. Okay? That's what it means by identifying the opportunity. Rather than having to go through all of these different markets and analyze every single one, we've looked at a chart and we've said, okay, Australian dollar's in a really good position. New Zealand dollar is also in a good position. You could also potentially look, if we see a spike up in pound dollar as a good position. Okay? That's what I mean by identifying the opportunity. So hopefully that makes sense. Okay. Number 2, we look at the higher time frames. So many people who I've come across who want to learn how to trade get sucked in to trading like the 1 minute chart when they first start. Some people even do like 30 seconds, right? These are super, super low time frames, super, super volatile. They don't give you a true outlook on what is happening in the market. You have to understand the way Forex markets move in particular. They work off of higher time frames. They work, big banks and big institutions, they work in the long run off of what we call macroeconomics, unemployment, economic growth, interest rates, right? Inflation. If you understand the higher time frames and you get what we call a full context, or I'll say market context, or some people like to call it a narrative. If you analyze your higher time frames, your monthly, your weekly, your daily, you'll get a very good idea as to where the market is likely to be going in the long run. And it also helps you identify what sort of market you're trading in. You know, are you trading in, are you trading in a trending market? Are you trading in a choppy market? Right? So think of it like this. If you're trying to catch a trend and you're wanting the market to really, really move, which would you rather? Would you rather want to trade in a trending market or a choppy market? What I mean by choppy is something that's moving sideways, small movements, really volatile. It's just going up and down. What I mean by trending is that there's a clear direction. Which would you prefer? Or if you wanted to catch a trend, what do you think is the best market to trade, trending or choppy? Okay. Exactly, guys. You want to be getting involved in trending markets, right? Something that's choppy, you're going to want to take shorter term trades. You can still trade them, but you want to be in and out relatively quickly. So what we're doing is we identify the opportunity, we look at the higher time frames, we get market context, we understand the narrative. Are we trading in a trending market? Are we trading in a choppy market? What it basically helps us do is it helps us understand what type of market we're getting involved in and how we're going to trade it. Okay? Again, a lot of people, they don't do this. They just jump into the 1 minute time frame, see that it's going down, they take a trade and they lose because it's super volatile. And they don't understand the type of market that they're trading. Okay. Once we do the higher time frames, we then move to the analysis stage. Okay. What I mean by that is it's all based on what we call price action, using tools and indicators. Okay. What I like to personally use, let me change that to a 3. These are the top tools I use in my trading. Okay. I use something called Trade Detector, which I'll show you in a moment. I use LTI tools. So these are automatic support and resistance. So just to make you aware, it's basically support and resistance, really important. It's trend lines. It's Fibonacci. Something called the daily trading range. We call it the DTR. Okay. I also really, really like moving averages. And I like stochastics. So I use quite a lot of tools, right? But they're all part of my plan. And you want to go down into your time frames and you want to do your analysis, you want to do your price action, you want to use the same tools in the same way every single time, which leads us on to the 4th stage, which is identify the setup. Okay. This is essentially the strategy. You want at least 3 reasons why you should enter. Okay. And again, for me personally, what I like to do is I like to have lots and lots of reasons why I should enter. Because the thing is that the more reasons I have, the higher probability the trade is. Okay. So my personal system, I like to use, we call it the rule of 3. So 3 trade detector signals, which I'll show you. I want to see inner trend line breaks. I want to see breaks of structure. I also want to see the 8 and the 21 EMA crossover. I also want to see pullbacks. So fib pullbacks. And I want to see pullbacks into support and resistance. Okay. Once you identify the setup, you then move into number 5, which is your risk management, which is, like we said, your percentage risk, your risk to reward ratio. Okay. So a lot of the time, or some of the time, should I say, you do all this work, you find a really, really good setup. The market's really, really moved in your favor, but you're looking at placing maybe 1% on the trade, but your risk to reward ratio, depending on where your target is, so stop loss and target profit, right? It might already be close to your expected target profit, which means that your risk to reward ratio is less than a 1-to-1. If it's less than a 1-to-1, you shouldn't be taking the trade. Okay. We want to make sure whenever we're investing our money into these opportunities, we want the same, if not more, of a return if we win. Okay. After the risk management stage, it's then execution, i.e. pressing the button or placing the order. All right. And then I will show you my full system on how I do all of this, how I identify all of these trades. But then on top of that, find early trends and ride them. And I'll show you exactly how I do that, okay? Does that all make sense, guys? It's a lot of information. I get it. Don't be afraid to say no. Hopefully the next section will help you out a lot. Seeing it actually live in action, okay? We'll do some live analysis on Aussie dollar. All right? There you go. There's the full kind of checklist for you. All right. Now you can take a drink, you can take a sip. After this webinar, I'm certainly going to have a massive jug of water, I think. After every time I do it, my voice goes. Because I'm just non-stop talking. You guys are probably sick of my voice already, hey. Watch the recording, Zach, if you can, just so we can save time, okay? Fabulous. So now that we know this, I'm going to go into my MetaTrader and I'm going to show you the system that I like to use. All right. So we have identified an opportunity on Aussie dollar. We want to go in to the Australian dollar versus the dollar, which is the chart that we're on now. And we instantly want to go on to our higher time frames. Everything that you see on this chart right now is 100% automated. This is our trade detector. This is trade detector 1, which is the red and green squares. Trade detector 3 gives us high probability reversal signals, overbought and oversold, and same for trade detector 5. When we go down into the lower time frames, we're looking for all three to align, and we want all three signals, and I'll show you what that looks like. All right. These channels and this price action is also already drawn in. Okay. So on the higher time frame, I always zoom in and I see, right, okay, all of these are weekly. We can see for the past 1, 2, 3, 4 weeks, we've actually just been moving sideways. We haven't really been going anywhere. I've got a narrative. I've got a context. I know where the market, I know what sort of market we're involved in. Okay. We're in a bit of a choppy market, which means if I want to take a really, really big, long momentum trade, is now the time to do it? Probably not. I want to wait for the market to actually do something and move first. Which, bit of a heads up, guys, we're expecting some pretty crazy NFP figures tomorrow. Non-farm payroll. Arguably the biggest economic event of the month, first Friday of every single month. The figures are being released tomorrow, so we could see some really, really big volatility in the dollar as of tomorrow. Okay. Maybe that will be the catalyst to make this thing move. But ultimately, what we've done is we've looked at the higher time frame. All we've done is look at the candlesticks and go, okay, we haven't really moved anywhere for the past few weeks. We've been moving sideways. I like to use automatic support and resistance. Pop that on. And you can see that we're kind of bouncing between a few key levels. We go down into our daily time frame, and this is where we're honing in. We're going into our lower time frames. We're getting more precise with our price action. We're finding more key levels and seeing, okay, where does the opportunity lie? Is this something that I want to get involved in? All right. So this is a choppy market. Do I want to be taking a short here and getting out all the way down here on the daily? No, because that's not the opportunity that this market is presenting us. More likely, do I want to be getting in here and getting out down here? Yes, because that's what we've been doing for the past month. Okay. And we can put in our daily support and resistance as well. And you can see clearly that we're bouncing off of these key levels. Let me so the best thing about these, they're really customizable. So you can bring down the amount of pips that you're looking at. That's too little. So we can do like, I don't know, 2,000 pips. Okay, there we go. So we now got our key levels. This candle hasn't closed yet. We're spiking above. This is a very good price to potentially short the market. Okay. Therefore, our currency strength strategy is telling us to sell. Our market context and the higher time frames are also saying, yes, it's a choppy market, but it's also a good time to sell. Okay. When we go down into the 4 hour, we can do some more work. And this is where you can start to see Trade Detector is actually picking out some really nice key levels. You know, Trade Detector 5 has entered into overbought. We're bouncing off of a key resistance level. Okay. It's looking really, really nice. Then we can go down into our 1 hour. And this is where it starts to become a bit more clear. We haven't gotten the perfect signal on our trade detector here, but that's okay. We're not expecting everything to align. What we preferably want to see is we want to see this really, really big red signal pop up for a sell. We want to see a really thick pink line here, and we want to see this go into this overbought area. So the last time this happened on the 1 hour time frame on Aussie dollar was up here. You can see that is a perfect signal right there. Big red square, big thick pink signal, and we went way above that overbought area. And you can see that the market just completely dropped off, completely tanked. We're not getting that. It's a pretty medium signal, right? But this is a fantastic opportunity for us to look for a short near enough now. What I like to do, because we're looking at a short-term trade, I'm going to go down into our 15-minute time frame. And we're going to analyze this even more. Based off of Trade Detector, what can we see here? We have all three of our signals aligning. This is what we like to call like the rule of three, 3 in 1. This is the perfect market condition for us to think about taking a trade. Okay. I covered it last week. For those that weren't able to attend, I covered how you can catch a trend early, right? Well, we've had a clear move up, right? If we want to catch a trend early, we want to anticipate the reversal, which is where we're at now. So the key, and I really recommend you guys note this down, the key to catching the perfect trend is being able to identify a reversal. If you can identify a true reversal, you are then able to get in near enough at the start of a trend. Does that make sense? Rather than trading, the bounces here and here and being really monotonous, right? If this market were to start to move to the downside, well, you can get in right at the start and ride it all the way to the bottom. So this is one element that we're looking for. We've got channel support, channel resistance here, sorry. We've got all of our trade detector signals aligning with each other. We can zoom out and we can even put in our trend lines. Wow. Okay. So the way that our trend lines work here is we don't just use one trend line, we use a series of inner trend lines, which you can see clearly here. They're perfect for helping us identify a reversal, because when we see an inner trend line break, there is an 80% probability that we will move to the next inner trend line. Based on where we're at right now, we have an 80% probability this market is going to be moving down to this area. And if we break this inner trend line, we have an 80% probability that we'll be moving down to these areas. Okay. We've also taken out these previous lows. So when you're experiencing an uptrend, you see a market create higher highs and higher lows, right? Which is what this market's been doing. This is the first time in a while it's taken out these lows. This is what we call a break of structure. Not only that, it's broken its inner trend line. Can you see how all of these now are aligning? We've not just gone onto the 1 minute time frame and pressed the button. We've actually identified a really good opportunity. We know what sort of market we're now wanting to get involved in, and we know how to trade it. We found a key level that this market is likely to react at. And then on top of that, we've gone down into our lower time frames and we've actually identified a really good trading opportunity, in that there's an 80% probability this is likely to go down right now. Olin, this is AUD USD. I recommend that you watch the recording, okay? Now, a trigger I really, really love to use when trading this. Yes, I've gone over a few times before that you can use moving averages. You know, you can use an 8 exponential moving average, and you can use a 21 exponential moving average. In this circumstance, they haven't crossed over. They're not giving us a signal right now, okay? But there is something in Trade Detector called Trade Detector 2, okay? This is my favorite tool for being able to get in on a trend early and ride it with a trailing stop until it gives me a signal in the opposite direction, okay? So yes, we've identified a really good trading opportunity. Is now the right time to get in? No, because we have not experienced the break of Trade Detector 2 just yet. And we haven't had that sell signal. But look what happens. Like, look what happens when we do get it. So even here, really good sell signal. You're able to ride this downtrend for about, that would have been 27 pips. You would have gotten out at. You can see when you're in a super choppy sideways market, it doesn't really like it. So you want to try and stay out of really, really choppy areas. This system that I'm showing you essentially cancels that out. You're identifying the right opportunities, the right trading conditions to get yourself out of this choppiness, this choppy market. It's nearly perfect for us to see this market start to go down if we start to get this signal on Trade Detector 2. Like, look at this. We've got a buy signal here. So when the candlestick closes, you get the buy signal. You would have been able to ride that up until you got the sell. That would have been an additional 33 pips. And again, look, the market became choppy. However, we have identified the right market conditions to say, oh, this area could be our reversal area. This could be the time this market decides to start moving to the downside. All we're looking for is that additional confirmation via trade detector 2 to say, let's sell it. And you can use that as your trigger. And as soon as you do that, you can just wait and hold it until you get a signal in the opposite direction. This works fantastically under the right conditions. Look at some of the signals that you can get. Again, here, down to here. This is just a 15-minute time frame as well, by the way, guys. So you can do this on any time frame. Even if we looked at the 1 hour, you can see the types of moves that you can get. You could have ridden an uptrend from here to here, 87 pips. This downtrend from here all the way down to here, 72 pips. $45 pips. And even here, look, this one was a little bit of a shorter one. That would have been a 10 pips, right? But we're looking at the 15-minute time frame. And if we see that signal pop off on trade detector 2, this is a fantastic time to look at holding that until you get a signal in the opposite direction. Okay? It's a very simple system, a very simple trigger. Say, like, look, we've identified the right market conditions. We're going to wait just for our trigger to pop off on our trade detector 2, and we're going to hold it. I'll show you another example. So I've covered with our one-to-one students, we're looking at a really, really nice trade on gold around 34,000, 3423.42. So 3,423.42. Okay. That's a really, really lovely area on gold. But look at how trade detector performs when you look at trade detector 2 on gold. Incredible. 492 pips on gold there. You know, even these short-term trades are great. 280 pips on gold. This one you would have come out around break even. Yes, you would have come out just at a little bit of a loss on that one. That's okay. This one here. Oh, we've done that one. You know, even if we go back, look at these. Look at these down when we're in an aggressive downtrend. Even here, 300 odd pips. Even here, 450 pips. If you can catch moves at the right time and just wait, look, 1,150 pips on that move right there. Absolutely incredible. But this is the type of market we want to get involved in. For those that are slightly riskier traders, you can also look at using Fibonacci. And here would have been a lovely potential entry point to get in. And this is a really, really nice target. Okay. Can you guys see the value in actually doing more work in your trading? Well, analyzing less currency pairs, but finding better opportunities. We're finding better opportunities. We're maximizing our work. We're finding reversal trades, identifying very, very early trends, and then using very simple tools to maximize the return on those trades. I want to relate, there's no such thing as a perfect entry and a perfect exit. What matters most is that you have a very easily executable system. I personally absolutely love Trade Detector. It makes sure that I'm consistent in everything that I do. It's the same with the London Trading Institute tools. Everything is automated in terms of my analysis. It's a lot less brain power. It's a lot quicker. right? But it allows me to get through the pairs and think about where I can enter a lot quicker. And then when I do enter them, I'm then maximizing my return. All right. Does that make sense? Yeah. Let me know who likes this system. Who's found it valuable today? You can be honest. I won't. I won't take it personally. I promise. But who's found it valuable? Look, we can see Aussie dollar is starting to move down. It's great. 100%. Awesome. Amazing. Thank you so much, Jason. Thank you, Sanjay. Thank you, Alpha. I really appreciate that. Love it. Yes, Harold. Get in there, mate. Lisa, fantastic. Amazing. Very, very glad to help. Thank you, Zach. Thanks, Linda. Really appreciate that. Raja, if you want access to any of the tools, what I always recommend, guys, is if you want access to any of this stuff, or even if you're just looking to get some guidance, be pointed in the right direction. Because the last thing that I want people to do is to try and cut corners and, try and make as much money as they can as quickly as possible. Because when you do that, you usually end up losing money. A really, really good kind of philosophy I go by, because it's the route that I went down in my trading. If you go down the right process and follow the right journey, you won't cut any corners, but you'll get to the end result quicker. You'll get to your destination quicker. You won't cut any corners, but you'll get there quicker, right? That's the main thing. So if anybody is looking for just some guidance, looking to get pointed in the right direction, let me know. Like, look, we offer all sorts of different training through to online and one-to-one. We do have a couple of spaces open. You're more than welcome to inquire. But really, I just want you guys to use me, reach out if you do have any questions. I've literally just very quickly grabbed my WhatsApp link here. Just click on that link. You can copy and paste it, and it gives you my direct business number. So if you do have any questions, let me know. I'm more than happy to help. Even if you're inquiring about the tools, we can sort you out with something. And like I said, if you just need any general recommendations, again, just let me know, and I'm always more than happy to help. A lot of the one-to-one students here know that I'm very much an open book. I can see that there's already a few names who have been on the one-to-one program, and all of them will know that I'm quite honest, quite transparent, and I'm always there to help, guys. All right. So glad that you enjoyed it as well, everybody. Thank you so much for the feedback. It means a lot to me as well, and I appreciate you taking the time out of your day to come and join. I know it's not easy, especially if you're at work or on your lunch break, or you've got other things. It just shows how serious you guys are too. But I hope you've really enjoyed it. Like I said, what you can do, you can go ahead, click on the link. Feel free to drop me a message. As always, I'm an open book. I'm happy to help. Really appreciate you guys joining. And I'll let you know when we're looking at doing another webinar. And hopefully we can provide even more value to you guys. Look forward to hearing from all of you. Take care, guys. Have a fantastic week. Have a fantastic weekend. And hopefully I'll be able to speak to you all soon. Take care, guys. Have a good one.